And thank you very much for joining us with that view on the markets as well. Thanks indeed. Dinshaw Irani is now joining us. He's Chief Investment Officer at Helios Capital India. Dinshaw, great to have you with us here on the program as always. Just a quick word on the market itself. I mean, I think there is widespread acknowledgement after third quarter earnings that things have slowed down a little bit. We had Sanjeev Prasad of Kotak who kind of said that. The only question is, we had Prashant Khemka of White Oak with us on Friday on the aftermarket program. He kind of acknowledged that. But how long this would last, goes back to the reasons why it is so in the first place. What are your thoughts? Is this just transitory in nature? As the inflation problem comes off, as rates peak, things should come back to normal in terms of consumer spending. Dinshaw, go on.
Thank you, Prashant, for having me on the show, and very good afternoon to you and your viewers. So, Prashant, basically, there was this aviation show held last week, and one of the shows was perfect replica of what was happening in the market. There was this fighter aircraft which came down, did a few barrel rolls at one low levels, and then moved up again into the blue yonder as such. So I think we are in the midst of those barrel rolls, and frankly, I mean, one of the reasons is the way the numbers are coming out. And I mean, though Unilever did call out green shoots in rural economy, but you didn't see that across in others also. So, and frankly, I mean, in the case of durables, there's a marked slowdown. That is no doubt about that. You talked about ACs. I think it's more of a stocking which is happening now, thanks to the season. By the way, thanks for reminding me for getting my AC service at home. So I'll be doing that shortly. But anyway, the fact is that things are looking stretched a bit, and really it's also the global market where the problem is coming from.
Hi Dinshaw, good afternoon. Nigel on this side. Dinshaw, I wanted to ask you about the IT pack. Even in today's trading session, the market's a little bit under the weather, but that's been doing quite well. You've highlighted numerous times that you wouldn't get in, at least the last time we chatted. Still staying away from IT?
So basically, Nigel, the fact is that probably we've been wrong in this for year-to-date figure of 1.5 months or so. Our call was to stay away from IT, and we were right the whole of 22. But I think it's more of a trade which is basically that they didn't perform the whole of 22 and they'll perform now rather than actual fundamentals kicking in. You look at what the guidances are going to be. I don't think it's going to be, I mean, when the March guidance come out, though the indicators in December itself was not that healthy. I mean, the December quarter numbers was not at all healthy in the sense that one saw the employment levels coming off and in fact layoffs happening in certain companies as such, which was like the first time ever when they started reporting numbers. So you'll see that the guidance for the March onwards year would be roughly around 6 to 7 to 8 odd% in constant currency terms, though. That shouldn't be that exciting for them to command P's of 27, 28 times. And frankly, I mean, if you go back to pre-COVID levels, they're still at some 30, 35% premium to their P's to pre-COVID levels. So I don't think we don't believe that's going to last for long. And frankly, I mean, may just come off once the global numbers also start trickling in.
Dinshaw, hi, good afternoon. Surabhi here. Good to be chatting with you after a long time. The one narrative that I hear building up a lot at the end of the third quarter results season is a weakness in consumption. Now, some people are pointing more towards the discretionary side. Then, of course, a lot of analysts are talking about the bottom of the pyramid as well, where there is pain, and we know that. I mean, that's been happening for a while. But what does all of this mean for investment strategy for this year? Would you be looking at the consumer basket? If yes, what side of it? There is consumer technology, then there's FMCG, then there is just pure discretionary. We were discussing ACs a while back. How do you play the consumer this year?
So we basically, you talked about down trading and all, one saw that quite rampantly in FMCG segment per se, where the premium segment took a hit and came off a bit. But I mean, on durables also, one is hearing the sound bites from retailers also and companies also that things are not moving as well as they were doing. But our belief is that this is more of a transitionary thing. I mean, it will be probably a couple of quarters before things start looking up. And frankly, as I said, that globally also things are not looking that great. So for India to start performing against the globe, the global markets have to stabilize, and that doesn't look like happening in a Hari, given the fact that in the US, you're talking about, I mean, the common theme was that the Fed will stop at 5.25, but now the increasing sound bites are that it will stop only at 6 and hold it there for longer. If that's happening, obviously you're not talking about a fairly steady markets globally itself. So that will make India also fairly jittery, and I think the consumers will hold back to that extent. And inflation has not been a problem in India, but I think if globally it raises its head, it's obviously going to be an issue going forward for us too.
Dinshaw, what is the recent price action in the banking stocks telling you? Names like ICICI Bank, State Bank of India are trading even lower than what they were prior to the Q3 earnings. And we know the Q3 numbers were blockbuster for them. Record profits coming in, improvement on every single parameter, and yet the stocks are trading lower. And we saw EPS upgrades as well. I know there is a lot of worry on the Adani Group side, and perhaps that's keeping a lot of investors on the fence. But what is this price action telling you? Because this is an over-owned sector. There is consensus bullishness. Do you think, given the price action, all of it could be in the price? What have you made of it?
So, Rima, basically what it tells me is to go out and buy. Unfortunately, I don't have money right now to buy more. But the fact is that look at the numbers, right? I mean, you talked about the quarterly numbers. They were fairly, I mean, they surprised on the positive side for most of the banks that reported the numbers, except a handful, which had their own set of issues. But the fact was that what is coming out is that people are assuming that the NIMs have peaked out. They may compress from here on. Our call is that maybe that will happen in a quarter or two, but beyond that, if demand kicks in the way we expect it to, obviously you're talking about the NIMs sustaining their levels and the demand kicking in. So basically the numbers will again surprise on the upside going forward, and that's what we're hoping for, and that's what we're playing for. And frankly, I mean, the valuation front also, they're quite appealing as such. In fact, we have a limit of 7.5% to which we can buy a particular stock. And most of the names that you mentioned, we are at full limit right now and can't, unfortunately, buy any further beyond those points.
Okay, Dinshaw, always a pleasure having you on the show. Thank you very much for joining in. We'll look forward to our next conversation soon. Sure. That's Dinshaw Irani and a view from Helios Capital. The news from the market is that we are still down. It's 100 gone on the Nifty. Banks are leading the losses. No change in that headline. We'll take a quick break, come right back, and as always, we'll get you a check on what the dealing room chatter is like this Monday afternoon. And of course, we'll get you some trading calls for the last half hour as well.